Hello, I'm Robert, and welcome to my channel, where I talk about everything that deals with automated algorithmic trading, or simply algo trading. Today I'm going to continue with the theme that I've been on lately, which is the Forex markets. But I'm also going to talk about some of the bigger pictures that are involved with this process and how they correlate to Jackrabbit Relay directly and also eventually into the cryptocurrency markets. But first, let's get started with the Forex market directly. For the Euro USD, using my long account, Cheesecake. When I started this account, I put just $100 into it from the proceeds from my short account. And over the last week, I have been using any amount over a balance of 300 to deposit into this account, which you'll see here on the chart. The little spikes right here are those deposits from my short account into this account. Now let's talk about this account specifically. This is since I started this account, and you can see it has really done quite well. A $30 profit in 1 week. So basically you're looking at the context of potentially $120 for a 30-day period if I continue the approach I'm going to be doing, which is to build this account up as rapidly as I can using my short account to help fund it each day without adding any additional deposits, or large deposits I should say. So the balance right now, as you can see, the slow, progressive, and steady climb. Simple and really concise. Not a big money maker, but it is doing well. It's doing better than I thought it would do for 1 week. And we're going to get into some of the transactions that took place over this week and actually look at the log and the history of this account. So now that we see the balance, we see the equity. And you'll notice that the equity went up to 110 and then it plummeted. So this is what I have left for equity in the account. Now all the safety protocols that I have in place are still working fine. So I'm not worried about this account going into a margin call. But I've picked up quite a few heavy positions. And if you follow the Patreon account, you'll get the details on just exactly why that took place and how it took place, as the new features that have been built into the bot to try to maximize it in defensive mode. But overall, you see here is the equity. Pretty straightforward. Now, of course, the counter to that is my actual money in the account, in the market. The actual money I have invested right now in Euro USD is pushing about $83 and change. Pretty significant considering what I have accumulated. But once the market turns direction, this is going to bring in a very nice and big profit. I wouldn't be surprised if this brings in another $30 next week or more. I have had literally $50 weeks with my short bot because of this type of a situation within the market. So this is not going to be surprising if that happens, but it will definitely be welcomed. So overall, my live balance, pretty straightforward, pretty realistic, pretty easy to see just how well this process is working. Now let's actually take a look at the ticker itself and look at the way the market really is. So here's the ticker data. Of course, the gaps. Where's my mouse? The flat lines are the weekends where the market is closed. And as you can see, the market has not been doing too healthy lately, at least for somebody not using an opposition technique. For me, this has been a nice little accumulation round, really where I get to test and look at the bot very well. And I'm quite happy about it. We see here almost a ranging market with very little volatility. Enough for the bot to really do its job at 2-pip profit levels, but it's not for a situation where a lot of the more powerful tools like a MACD or Bollinger's are really going to be able to do much for this week. At least not until the volatility started going crazy at the end of the week. And then it started out, and well, last week was just one big hot disaster for anybody not using an opposition technique looking to try to capture the reversals. And we get to the frequency count. This is a very unique process that I need to really go into a lot more. See, when the bot tracks prices, it tracks the number of times it's seen that price. And that's what this chart is. This chart shows the highest count price per frequency. I need to make a chart that actually breaks down all of the frequencies by order of how much they've been seen, but this tells you which one is where the highest price count for crossing has been. And that's important for a lot of reasons, because the bot has a special formula where when the predicted price equals this price, it doubles down in a position. And that could really be a huge killer on the budget if it happens too often. So safeguards are in place to make sure that the market is in the direction of your trading before something like that takes place. Of course, if you have the budget and you're not using a percentage-based margin limit, then this can really rake in the profits. But it can be high risk. So you have to understand this part of it. The frequency boosting method is extreme high risk. And it still obeys the margin limits. And of course, the predicted price value. This turned out to be better than I thought it would, actually. I'm surprised at how well the algorithm is adapting to the market. Because of the techniques I'm using to calculate this, I wasn't sure it was going to be adaptive enough, quick enough. But it's done better than I thought it would. A lot better. And it's really kept the bot working very nicely in terms of its predictive behavior. So overall, things are looking good for the general consensus of the bot. The market, that's a different story, but the bot is doing well. Now let's talk about last week, where you see the changes I've made in terms of the position sizes. And you'll see the drastic jump. For example, 597 to 927 units. And then you see just how those really reflect the normal processing or the normal unit levels that have existed prior to the frequency boosting. And that's the whole point of the frequency boost. To maximize the threshold of smaller position sizes with a heavily regulated mathematical approach that actually counts the number of times a price has been seen. That is, if the price has been seen 40 times, and you're using a 10-unit position size as your base level, then it's going to purchase 400 units with frequency boost enabled. Now that seems like a lot, but if you're in a very defensive bot, you're not going to get very many trades. And frequency boost is meant to maximize the lower percentage margins of your account. Specifically, it is only allowed to be used if your margin limit is below 37% in the account. So as your margin limit climbs above that, frequency boost is automatically disabled as a safety precaution. But if it's below 37%, then it gets used and it beats out some serious profits. So that is one of the bigger things to pay attention to, is frequency boost can really rack up profits if you have the potential for what it's capable of doing. Now, I am using this with confirmation on my long and short bots, but this is a risk because it can burn my budget up quickly, as you just saw from the charts, with that big spike as I racked up literally 3 big heavy positions. And I mean heavy. But these things are going to bring in close to $1 when they sell off. Now that doesn't sound like much, of course, price-wise, but when you look at the market and you see where it's at, that's a big boost for this kind of a bot. Remember that profits are aggregation based. They're not meant to be one position brings in a huge amount. This thing trades close to 300 times a day. So those little pips add up quickly. And bringing in 20 cents for one single trade is a huge bonus to the balance as this thing continues to build its positions, which you can see within the balances here just how quickly things will transpire. Now this is this is the short bot, not the long bot. So let's go to the long bot. The bot where all the action is at right now. Go to the bottom, and here you see the position sizes. Notice they're small. Let's come up and let's see where it starts slamming out the bigger ones. Here we go. And you can see the difference in your logs. For example, 119, 119, 105, 112, then slam 500, 800, 700, 800, 700. Huge position sizes compared to what this bot was doing in the previous system, or in the previous effect. As you can see up here, this is where frequency boost really shines. And as you can see, it slammed out that position, sold it off, got hit with a bigger frequency level, and sold that one off. And that's the point. This is how the bot can maximize lower positions in a defensive state and really capitalize on just what it can bring in. Because as it continues to collect the ticker data and adds to the information it has, it gets to a point that it begins to really learn the frequencies of the market data that it is collecting. And those frequencies translate directly into position sizes that can really bring in huge amounts of profit. but you must understand how this works. Test it in a demo account first, and you can see just why confirmation is so critical to making sure this process works properly. And that really is a big standpoint with respect to how this process works. Because once it goes over the margin restriction of 37%, as you can see, the position sizes go back to very low on the basis of what the count was previously without the boosted position sizes. And you can see just how quickly, along with my deposits from the short account, let's come up here. So let's start here. You see the balance of 122. Now watch how this balance climbs quickly. And you see just how aggregation really works. And then when you see the frequency boosts, you see very quickly the regular profit basis, and then just how much the frequency boost actually affects the balance. Doesn't seem like a lot, but when you take into account the number of trades that this bot is making, it is huge, huge amounts. And as you can see, that aggregated effect, that is everything. That is what makes this process so powerful, so devastatingly powerful. And one of the, I don't want to say strongest because that's not the right word, but I believe resilient probably is the best word for this situation. It makes it the most resilient process to use with the proper testing. And that brings us to what we see here. Notice that the times are all screwed up. No conformity whatsoever. And that's the beauty about this whole process. So for the underlying test bed of what this represents, conditional trading, this demonstrates fully and completely a price action methodology that is not limited at all by time constraints. Now these are my real accounts, live money, and you can see what my margins are right at the moment. My short bot has $9 in margin consumed with a remaining amount of $219 available for my margin, not my balance. My balance is $300. And here I have $84 of margin used. I have $95 of margin total. And the balance is $130. So you can see just how that margin and those limits really kick in and why it's so critical to watch them. But we go to the demo accounts. Watch the times. 1 second, 21 seconds, 11 seconds, 15 seconds. No rhyme or reason to any of this, and yet it is making money. This is the point that the market needs to be really emphasized. When you're trading this kind of a technique, time isn't a factor. Time is not your worst enemy. You don't need exact precision unless you're trying to do extremely small spreads. Even with a 2 pip spread, I'm still making profits. I'm still making good profits. And that's the whole point. For example, this particular bot's already $52 into the good. Excuse me, $852 into the good. So $852 it's earned with this extreme situation. Now, the pound yen, it isn't going to be traded again for lemon meringue until after all of the rest of the trades are completed. And this one bot manages 4 different accounts. So you figure an average of 10 seconds while I'm trading 60 pairs on 4 accounts. So that's 240 times 10. That's how often this one single pair gets revisited. And yet it does exceptionally well with the market. But that's the whole point that this process is being built for. So that once fully tested and integrated into Jackrabbit Relay, driven by TradingView will provide the entry positions. The rest of it is all dynamic. You never have to worry about it. You set up the basic blueprint. It does everything for you. That is the whole point of conditional trading. You don't need to worry about taking a profit. You don't need to worry about market volatility. You don't need to worry about the number of pips that it takes to purchase or the number of pips it takes to sell. All of that information gets accounted for automatically by the sub-process. You set up your recipe, you connect it to the bot, and you just let it work. And it worries about all of it. It will track and store all the positions necessary, and that's that. Simple, easy, convenient. It becomes a whole different paradigm of thinking. And that process requires a lot more than the standard or traditional mindset in trading. You're getting to the basis or to the point of trading that the system is using a large number of mathematical equations to maximize your profits in a meaningful way. And that really is the core of what conditional trading is within Jackrabbit Relay and what this program represents. The fundamental building blocks of that process, such that you make your purchase, it figures out the best way to sell it, trying to maximize your profits. And it does so in a completely ununiformed, chaotic manner that really fits in with the market in general. Now, if you've been following my Patreon, you'll have a lot of information regarding this process in detail, where I talk a lot about the problems of scaling. I talk about the performances behind the scenes, so forth. So if you're not subscribed, you're really missing a lot of information that can help you make some very informed decisions. But if you are subscribed, then you know just how valuable this information already is. So from here, I'm going to go ahead and just let this run for a few minutes. The markets are closed, but you'll see where the accounts are right now. And that's really the point of what this screen tells me. What's going on with the account at the moment in terms of how it's going to function and what assets am I going to want to continue to trade in for my live account if I decide to move away from Euro USD. So, while this is running, give the video a like. Help other people find this information and share it. And if you want notifications and updates for any of my content, be sure to subscribe. Let me know if you have any questions, leave a comment, or put them in the support server. And until next time.